Today in this video, guys, I'm going to be showing you a strategy that if you use it, you're going to become profitable within 14 days, okay? This is for all of my 9 to 5 traders who don't have enough time to trade, all my 9 to 5 US traders, all my Canadian traders, UK, etc, okay? You get the point. But I'm going to be showing you the strategy today and you're going to be completely profitable from it. So what you're going to be doing is only trading within the London kill zone session, which is from 7 a.m. until 11 a.m. on a 5-minute time frame, okay? You need to mark out the highs and the lows of Asian session, and you need to identify which part of price actually gets liquidated first. I'm going to explain all of this on a fundamental level first so you know exactly what I'm talking about, and then we can actually go into the actual chart so you can see what I'm talking about, okay? So as you can see, that's Asian session right there. We're not going to worry about Asian session too much, but we need to mark out the highs point and the lowest point of it, okay? And as soon as we do that, we need to actually now figure out which part of price actually gets swept. So as you can see, in this instance, the highs completely got swept. So this is our liquidity sweep, or I could just type liquidity right here, okay? So you could either do both. As you can see, that's liquidity that's completely been swept. And once we actually do get a liquidity sweep, what we need to do now is find a breakage of structure where fractional highs / fractional lows have completely been swept, and then we can reinforce our market structure shift with an engulfing candlestick if it's possible, okay? So what we need to do now is find a breakage of structure towards the downside, because we are trading a reversal strategy, okay? So as you can see, we're going to be waiting for price to give us one of these type of movements where price will actually break on itself, and it will give us one of these right there. So as you can see, this will be our market structure shift right here, and I'm going to be explaining what a fractional low or fractional high is in the actual chart example so you can get a better understanding of it, okay? But as soon as that happens, what we need to do now is identify a fair value gap, and we can just straight away enter our position. But as you can see, the fair value gap usually overlaps with the market structure shift, and it will be something like this: fair value gap. And once we do get the fair value gap, what we need to do from here on out is short position this straight away. As soon as we short position, what we need to do is place our stop loss just anywhere above this highlighted area and place our take profit at Asian sessions lows, either Asian sessions lows, or we place it at 1-to-3 to 1 ratio. At this instance, I'm going to do Asian sessions lows. So as soon as we do that, what we need to do now is actually wait for price to actually go back into the fair value gap area, and it will go down to completely smash our take profit. So as you can see, this is exactly on a fundamental level how the strategy works. I'm going to be showing you this on an actual chart right now. So as you can see, we have the charts right now, and what we need to do now is very, very important. You need to mark out the highest point, which is here of Asian session, and then you mark out the lowest point of Asian session, which is here too. As you can see, once we actually marked out the highs and the lows of Asian session, what we need to do from here on out becomes very, very crucial, because what we need to do is wait for price to actually sweep one of these two. So as you can see, it already swept the lows. So what we're going to be doing is marking this out as our liquidity right there. And once we actually do get the liquidity, what we need to do from here on out is actually wait for price to actually give us that market structure shift with the fractional high, okay? And I'm going to be giving you exactly what fractional high is. As you can see, this is the fractional high right now, and this is our market structure shift, and I'm going to be explaining the fractional high in 3 different instances. But just before I do that, if you're in the USA, if you're in the UK, Canada, Australia, any of these first tier countries, and you're looking to actually passively make $3,000 plus every single month, listen, if you join MSPass right now, we can literally get you funded. As you can see, John right here got completely funded. He received the email, he received everything, because this is what we do. We pass your account, get you completely funded within a week, and after that we completely manage your account for 4 months, okay? As you can see, 4 months, and then you get paid out every 21 days. We withdraw a payout, and then once you withdraw that payout and it goes to your account, what we need to do from then on is you keep 70% of the money that is paid out, and we take 30%, and that's how our service works, okay? You don't pay anything up front. You could just join. You do not pay anything up front. So make sure you join the first link in the description before actually spaces do run out, because we do have a few spaces left for this month. So make sure you do click the first link in the description and join us if you do want to make 3 to 5k a month passively, okay? But anyway, what we're going to be doing from here on out is actually marking out our fair value gap. But just before all of that fair value gap stuff, I'm going to be showing you exactly how you can identify a fractional high, okay? So as you can see, it's a 3 candle pattern. Fractional high is a 3 candle pattern where the one in the middle is actually the highest one. I'm going to just be showing you in this instance right there. As you can see, these are 3 candles right there. I'm going to just put the wicks with them. You can see the wicks are right there. I'm going to be putting wicks in every single one. And from here on out, you can already see how price is actually forming these wicks and how it's forming these candles. So as you can see, this is a 3 candle pattern, and as you can see, the one in the middle is the one that is the highest, right? That's completely correct, because the one in the middle is the one that's actually giving us the most pressure. And as soon as we get the one in the middle to get the highest, this will be our market structure shift, because that's what we want. Okay, but if price actually did a movement like this, where the one before the one in the middle was the highest, then the middle one would not be the fractional high anymore, and we would need another candle here which is shorter than this one to give us that fractional high. But as you can see, this is our fractional high right here, and all we've got to do from here on out is mark out this as our market structure shift, and this will be it, right? So that's how I personally identify 5-hourly gaps, and I've made over $500,000 within forex. So you can tell that my strategies do work, so you do use them. Okay, so we're gonna mark out our 5-hourly gap right here, fair value gap right there. And once we do mark out our 5-hourly gap, what we need to do is actually long position this right here, and we will need to actually place our stop loss just below this candle right there of the FVG, and we're going to be placing our take profit as a 1-to-3 risk to reward ratio at least. And as you can see, now it's a 1-to-3 risk to reward ratio, and it's completely well. So what we need to do now is completely crucial, because as you can see, price always hits my take profits in my videos, and it's because of one reason. It's because I know the markets inside and out, and I've been studying this strategy for almost 2 years now. So if you do want to actually use these strategies and actually incorporate it in a way where you can always make profits, just make sure you watch my videos all the way until the end, every single one. Okay, we're gonna go back to this example right here. So as you can see, I'm gonna just recap on this. So you're gonna be waiting for Asian session to do whatever it wants right here. Once it gets to a specific trading time, you mark out the highest point and the lowest point. So the specific trading time will be Asian session, so it'll be anywhere around here or anywhere around here. Okay, so that will be specific trading time, Asian session. And if you want my indicator, comment down below indicator and the country that you're from, and I'll send it straight to you. Okay, as you can see, that's done. And what you need to do now is very crucial, because you need to figure out which side of liquidity gets swept first. As you can see, the highs got swept. I marked it out straight away, and once we actually got the market structure shift, you mark out the fair value gap with it. And once we actually do that, all we've got to do from then on out is actually place our position. And once you place the position, all you've got to do is wait for it to hit your take profit, and you start making money. And that's exactly how easy it is to make money with forex. Okay, but if you still can't do that, just make sure you join the first link in the description, because there's so much people who are actually messaging me to actually join my service, because it's completely free. So make sure you join, DM me pass or DM me funded, and I'll get you started up on the program MS Pass straight away. But anyway, that's gonna be the end of the video, guys, and I'll see you guys in the next one. Take care.